Abe's LDP securing an expected victory in the upper house election. How are you advising clients now with their Japanese investments? The Nikkei 225 index has rallied 40% since the start of the year.
Well, this clearly depends on the view of dollar yen, and what the many market participants are expecting is for continued weakness in the yen as a result of the continued quantitative easing and printing of money by the Bank of Japan. Now, there are some concerns over how much of this has already been factored in, and what is very clear is that the continued movement higher in Japan will be very much related to additional measures that are coming. Now, that could be either on the fiscal side, or it could be from the Bank of Japan, or most interestingly, it would be if there is some structural reform. So here what I'm talking about are really the three arrows of Abe's strategy. And what is interesting is that the high on Japan was reached when the Bank of Japan said that there wasn't going to be any additional money, at least in the short term, and then the markets corrected. So for the time being, we remain longer term bullish, but in the short term we would remain constructive, but would probably prefer better levels to buy in at. It's certainly a market, as we saw on Friday, that can be very vulnerable to positioning and unwinding, and so some caution is warranted in that market.
With the renewed money market volatility in China in the past week and Beijing's move to liberalize bank lending rates, how would you position on Chinese assets?
I think the big problem for China is really the cost of capital, as opposed to the tinkering around with the rates for the banks. Obviously, it's a longer term positive for China, but the real question and the question that is immediate in the mind of the markets is what changes in terms of the short-term liquidity squeeze that many small and medium enterprises are facing, trying to carry over their loans in the next few months. I think that doesn't really get impacted by this move, but in terms of the longer-term liberalization of the Chinese financial system, it's a positive. It's very interesting to see this morning, for example, that the reaction of the Chinese banks to the move has actually been fairly muted, even though you would ordinarily expect their net interest margins to come under pressure. So not a dramatic game changer, but more of a longer term positive.
Would you recommend buying Chinese banks now?
I think there is some value appearing in the banks. What has happened in China is that the market has already priced in a fair amount of bad news, and what has happened is that as you started seeing China strategists downgrading their numbers, you actually have seen a bounce in the market as the Federal Reserve came out and talked a bit more dovishly. What the Chinese banks and what the Hong Kong equity markets in general are going to be a lot more vulnerable to is the direction of the dollar. And at least in the short term, what Mr. Bernanke and his colleagues are telling us is that they are a bit more dovish, at least in the near term. But what the events of June have really told us is the potential impact on a lot of these stocks once the Fed does start tapering. And in that environment, if you start getting a much stronger dollar accompanied by higher bond yields, then that's going to be a lot more negative. But at least in the short term, it does feel like the big selling that we had seen in June has abated, at least for the time being. And in the short term, for the next few weeks, maybe next month and a half, maybe, we do remain a bit more constructive than we were going into May and June.